Well, thanks, Jared, for coming by.
Thanks for having me.
And we wanted to get some of our friends in the industry to come by and share some personal experiences, whether a real estate transaction, but I really wanted to invite you to come by and share your experience as a real estate investor.
Absolutely.
And as a young entrepreneur, we have a lot of people that we are probably teaching and coaching on how to become an investor and how to invest in real estate. And me being a mortgage guy since 2001, I've seen a lot of ups and downs and sideways, and 2008 crash, and last year the highest rates ever. That 40 years.
I felt it. Yeah,
and you feel the pinch as an investor. You feel the pinch on the cash flow, right?
Yes.
And the prices are not coming down. So
absolutely,
it's like, what the heck's going on? Because usually you have a higher rate and prices going down.
Right.
You have a higher rate and the prices are still high.
Absolutely.
So somebody that could afford to buy, a $200,000 house, now they can afford to buy a $140,000 house.
Right.
But the prices are not down.
That's right. It sucks, man. It's a weird market.
It is. How do you deal with that, and what do you advise your clients?
Man, so my advice is, to my clients is, try to do creative financing. I was introduced to, owner financing and lease-to-purchase. And to be honest with you, I much rather that than, doing a rental. Mm-hmm. And the reason why is because, I could lease purchase my property out and not be responsible for the repairs. Not only that, you give me a down payment of, let's just say $5,000, $10,000. Mm-hmm. You give me a monthly amount. So that means if I do have a mortgage on this property, it's covered. I'm cash flowing. Then on top of that, I'm still appreciating at the same time. Mm-hmm. And I just feel like, man, it's a win-win for the buyer too, because guess what? He doesn't have to provide paperwork like he would for you if he was getting a traditional bank loan.
Right.
Me, I do no credit checks or background checks. So that allows the buyer to come in and just, entice the buyer to, let me work with you instead of going to the bank. And I offer a lower interest rate than the bank. Mm-hmm. The bank is wanting 20%. Maybe I could do, 10% down.
So owner financing?
Yeah, or lease-to-purchase. Yeah. I like lease-to-purchase more than owner financing.
Yeah. We just had a closing this week.
Yes.
Val and James, she was awesome. And I really like her story, single mom, buying her house. And I was impressed because she said, I'm not closing, Jared's not there.
Yeah, she told me that.
If he's not there, I'm not signing the paperwork. He's the only person I trust.
Man, that's awesome.
So that speaks volumes, man.
Absolutely.
Congratulations.
Thank you.
I owe her a massage and a gift card from Zia, so I'm gonna go buy it probably today or tomorrow and bring it to the house.
Oh, that's awesome, man. And I told Val, and I'm like, man, if Five can't do it, it can't be done. That's what I told her. I said, man, Five's a man.
It's a gift and a curse at the same time.
You know what I mean? Because people, have you at this high expectation. But I mean, that's what we do, man. Mm-hmm. Our buyers' needs, we put that over our commission checks. Mm-hmm. I mean, that's how I operate.
Yeah.
And I know, just talking to you, how long we've known each other, you do the same thing. We had another deal, maybe a year or two ago, that it was the same, not the same issue as Valen, but I mean, we ran into some hiccups, but we made the deal work to get our buyer into the house. And that's how, you get business, man,
Yeah, no, I think this is the most rewarding part of our job, and with our setup, and we've been doing this for a long time. So
absolutely.
I was talking to Shelly Bentley in the podcast last time we shot it and said, the advantage of broker versus retail is that on the broker side, you have more options.
Yes.
So if you have more options, if there's a way, we're going to find it. And with a experienced team with that many options, we got to get creative sometimes. Sometimes we got to think outside the box and say, hey, do you have money here? Or can you cash in your 401k? Or can you get a gift?
Yeah.
There's so many options when you put, a little bit more money down. And in her case, it was awesome that we're able to do that. We tried the RD route, didn't work. RD, really tough on debt income ratio limits. FHA is a little more lenient. But she's a happy home buyer. So.
Oh, she's very happy. And I tell my clients too, look, you're not going to have a straight path to closing. It doesn't always work like that. You always have a couple of hiccups, but it makes it that much sweeter at the end,
Yeah.
So
when you get the keys, make it.
Oh man,
it's like you're going through a little hazy.
I'm pretty sure she's gonna forget about all the hiccups we had.
Oh, yeah.
You know what I mean?
Definitely.
So it was worth it.
No, she was a pleasure to work with. Right?
Oh yeah,
and then it was cool because she trusted us. It was stressful, but she was like, "Okay, we're gonna get it done."
Yeah, a lot of counseling. I tell you, there's a lot of counseling, bro.
That's good.
Yeah.
So let's talk a little bit about the real estate investing part of it.
Let's go, man. My favorite.
What's your goal? What's the end goal? And you've been doing real estate for a while now, right?
I've been a real estate agent since 2016, but I've been an investor since 2020.
So in the real estate investing world, I like to ask people, what's the end goal? Because, people buying properties, and how many is too many? What is your goal with the real estate properties, man?
I'm gonna tell you what my goal is, Five. My goal is to buy more time.
Mm-hmm.
I mean, that's all I want, more time. And how do we get more time? Well, buying assets that pay for your liabilities. I'm the guy that likes to sit down and watch movies with the kids.
Mm-hmm.
Why can't I do that while making money at the same time? So my goal is to buy more time and give my children a head start in life and their children's children.
I love that. It's so important, man. we take it for granted, especially with kids, right? They grow so fast.
Oh yeah, facts.
That's part of the reason why my wife and I decided to go to Key Biscayne, because I have, at the time was, today they're 7 and 5, but it was 2 years ago, so it was 5 and 3.
Yeah.
And man, you can't freeze them. I wish you could freeze them that age, because after they're 8+, they have their own friends and they want to do their own thing, and then they become teenagers and they're like, hey, they're just hanging out. They just live in the same house, But to build a relationship with your little ones at that age, you have from 2 years old until 5, 6 years old to really build that bond.
Right.
And if you can get more time, that's priceless. If you can find a way to have more time, and instead of just working, and I find a lot of people on that rat race, they're in the hamster wheel, they can't get out.
Yeah, I was on that. I was on it too, Fob. Like, it was many a days, man, I would go to work crying, bro. just praying. I mean, I'm a Christian, and me and Jesus have a lot of talks. We have a lot of morning meetups, right?
Yeah.
So I'm just like, man, it's got to be a better way. How can I shake this? How can I get out of this rat race? I know you have something more for me, And he sent me Terica Lynn Smith. Terica hit me up and was just like, hey, look, I'm going to start teaching people how to real estate invest.
Mm-hmm.
And I want you to come to my class. And I said, hey, T, look, if you can promise me that I don't have to work a 9-to-5 job no more, I'll do it.
Mm-hmm.
So, yeah, you're going to make plenty of money, buddy. I was sold.
Uh-huh.
And, man, we did that. We did her workshop. It was called How to Play Monopoly in Real Life. And once I got that information from there, man, I just took off.
Mm-hmm.
And that was the very first start of becoming a real estate investor after that workshop.
Awesome.
Yes, sir.
Yeah, she's doing very well. I love her story.
Very. I just always keep that in mind when I'm doing these deals or trying to, build my portfolio up. I sometimes say, man, what would Terica do?
Yeah. That's
so
awesome.
yeah, but she's a great sister to have. She protects me and shows me, okay, this is what you do. Don't do this.
Mm-hmm.
So man, it's good to have a coach.
Yes, definitely. I'm huge into coaching. I started actually I hired coaches in 2015 in a mortgage business. I was looking for a mortgage coach because there's a lot of real estate coaches.
Oh yeah.
And nowadays with Instagram, everybody's a coach, right?
Everybody's a coach, man.
But I jump into it and really changed my life.
Really?
To apply the principles and the schedule and the prospecting and just having a plan of what you're gonna do. I have a sheet on the wall, taped to the wall, that I know exactly what I'm gonna do Monday, Tuesday, Wednesday, Thursday, and Friday. Just having the direction.
Yeah.
It helps so much in production, and not only that, but you're sharing information with other people that are successful.
Yeah.
So you want to soar with eagles, then go hang out with the eagles.
Right. Big facts.
Find the eagles. Where are they?
Man,
they're not flying around with the pigeons.
Man, I promise you, man, those real estate conferences, Man, sometimes I don't be having a lot of finances to go on this trip, but I make a way.
Yeah.
And man, I run into some pretty, heavy hitters, man.
Yeah.
And we make that connection, and now next thing, a deal is happening. Just because, man, I moved off of faith. I wasn't looking at what's in my bank account, but I looked at my faith account, and we made a deal happen.
That's awesome.
So,
yeah, you never know when you're gonna shake hands with your next
you
partner.
You never know, man. You never know. Yeah. So that's why, I treat all people with respect. Like, hey, look, you may know somebody I don't know. How can I help you? How can I find the person that I need to know that you know? So that's what that's how I look at it. And, when meeting new people and making new connections.
Definitely. That's awesome.
So how I got started was I got the information Terica taught at that seminar. And so the first thing I started doing was trying to find, lenders who can lend me some money to go buy some real estate. Well, I didn't, I guess I didn't qualify because I'm an investor, just a new investor, a newbie, if you will. And nobody really wanted to take a risk on me. So I just remember receiving a lot of no's when trying to, get some financing to buy a property. And I will always tell them, like, hey, look, I'm trying to buy a property. I'm trying to get assets. I'm not trying to go buy some Louis or Fendi, Yeah. I'm not trying to do that. But, of course, I got a lot of no's. So I just remember praying one time and just was like, God, you didn't bring me this far to bring me this far. Like, what should I do? And he told me, man, look at your bank account, man. So mind you, while I was getting all these no's, I was still working and making a nice, chunk of change over the time period. So I look at my account and I had enough money to purchase this foreclosure in Church Point. And so I reached out to the real estate agent. I want to say they had it on the market for $18,000. Well, I negotiated that property all the way to $13,500. And I was able to buy my first property cash for $13,500. But crazy part about it is I didn't have enough money to rehab it. So I got this property for $13,500, but not enough money to rehab it. I prayed again, and so I reached out to my bank. Shout out to Advanture. They're not sponsoring, but yeah, shout out to Advanture. And I looked at the website and said, how can I find loans, business loans, and then I saw, what was that? Personal loans. That's what I seen. Personal loan. So I went on the website and I put in the information. I'm like, you know what? Let me give this a try. I didn't even expect them to reach out to me. So I asked for $35,000, and they hit me up like 5 minutes later and was like, hey, Mr. Baker, we can't give you 35, but we could give you 25. I'm like, so let's do it. I wasn't expecting anything. So man, Advance sent me a check before the end of the day for $25,000. Well, deposited into my account. So I had the money to rehab. So mind you, I own this free and clear, right? I'm still a newbie. I'm still trying to figure things out.
That was your first one, right?
This is my first one. So I fixed this property up. I want to say maybe I put in, I don't know, maybe 40,000 into it. We got it appraised. It appraised for $95,000. Mind you, I bought it for $13,500, man.
That's
and
awesome.
It's appraised for $90,000. And I end up getting a check for $76,000 for fixing up this property. I never seen money like that before at one time like that. So I'm like, man, where's the next deal?
That's awesome. This is a pretty awesome return on investment.
Man, what? Never in my life seen $76,000. Back in the workforce, I'm looking at maybe 2 years to get that, 2 or 3 years.
Yeah.
This all happened in, a matter of months. So I took that, that momentum, and I just started buying mobile homes and stuff like that. And yeah, man, that was the beginning of my journey. That was my my turnaround moment, because I almost wanted to give up because I kept getting no's from these banks. But I mean, hey, cash is king, man. So sometimes you got to get creative with it too,
Yeah, you gotta earn your stripes, right? In the beginning, there's a bunch of no's, and then that was your first.
That was my first
investment property, and then now they're looking at, hey, this worked out pretty good. You turned 13 to 76. That's awesome.
Yeah, man.
Right?
Yeah.
Actually, 95, right? 76 is what you got left, right?
Right, absolutely.
But then the second one is you kind of start building that rapport with the bank, right?
Right. So this one, I decided to use a hard money lender. Mm-hmm. And at the time, this was after COVID. Mm-hmm. So, like, it's still in COVID, season, like, the thick of it. So at that time, man, that's when interest rates were going to, like, man, sky high. They wanted, like, so much money down, like 25%, 30%. Mm-hmm. So I think at the time I had to put down 17% on this particular property, and I had an interest rate of 14%. Oof. Yeah. I got that a lot too from lenders. Trying to refinance that mug, man, and I couldn't get a bank to do it, man, and I had to take a loss on that one, man. I sold it.
Yeah.
Yeah. So we fixed it up, but I was charging $900, I think at the time. My interest plus principal was like $876, I think. Mm. So I was still cash flowing, but I mean, not a lot.
Yeah.
Yeah, so I had to cut my losses on that.
Yeah, that happens a lot. We had some tough experiences in a real estate investment world. I bought a fourplex at Ildacon back in the day.
Come on, man, how'd that go?
And that was it was an interesting experience. I became friends with my tenants, and they were really cool, Mm-hmm. So I'll go get my go talk to my tenants and see what's going on over there. But I kind of bought it the year before Katrina.
Oh wow, man.
Okay, so I was able to buy it for a pretty good price. My mom was a real estate agent. She retired now, but my mom is my mentor.
Yeah.
She's the reason why I got in the mortgage business. She said, "Look, there's this fourplexes that cash flowing pretty well, and they're selling for $70,000. Or it was $69,000 back then."
Yeah.
And it was challenging in learning how to become an investor and a landlord.
Yeah.
You kind of had to build some thick skin to deal with the craziness, to deal with the sad stories that are just lies. I remember a tenant crying to me saying that she couldn't pay the rent because her son had to go to the hospital.
Right.
And man, I felt like shit, and I was like, don't worry about it. I'll skip this month, or don't pay this month.
Come on, man.
And I go home, I'm upset about it. Like, it's kind of, bothering me. And my ex-wife is a nurse. And she said, she just lied to you. And I said, what do you mean she lied to me? She said, you go to the hospital, they have to take care of you. They don't give you a bill. They give you a bill later.
Right.
And she's a nurse. She knows that. I don't know.
Right.
And I was like, what? She just played me.
Oh, man.
But, she was a really good actor. It's an actress. And then she put out a show, and I didn't let her pay rent, but then I surely evicted her after.
Really?
But it was always the same song and dance there. And they'll not pay you here, and then go move somewhere else, and then do the same thing a few months later.
Hey, absolutely.
So, it was my first fourplex, my first investment property. So I learned a lot from it. But right after COVID, mm-hmm. there was a company that came to Lafayette, Murphy Oil, buying a bunch of real estate.
Okay.
For crazy, New Orleans money, because New Orleans was completely destroyed. So they're coming here, and Lafayette was like their, satellite city.
Yeah,
right?
yeah.
And everybody's coming here buying everything. I remember going to my mom's office at Vinny Romero when they were in South College, mm-hmm. and my mom said, "You need to come here because it's pretty crazy what's going on." So every rental property was gone. Like, all the rental properties were gone in 48 hours from Katrina.
Wow.
And then after that, they realized they couldn't rent anything. They start buying everything. So I would see realtors walking down the hallway with 5 contracts in their hands. And I'm there, the only lender. So I'm like, hey, anybody needs a pre-approval here? That's probably my record number of leads. Just here's a contract. Can you close it?
Wow.
And I remember one of those clients, so it's Penny McGeechy, She's a realtor with Blatt & Bloom now. And she said, Fabio, those are my friends from New Orleans. Their house is completely destroyed, and they living off a U-Haul truck. How fast can we close this deal? And I was like, okay, we're going to have to make some magic happen and close this deal pretty fast. And back then, so that's in 2000. Katrina was 2005, right?
2005, yes.
Yeah, so right at 2005. That's when, back in the good old days in the mortgage business, you run afoul. And there was this program called WOW. Wow your clients and don't ask for any documentation, just a copy of their driver's license.
That's it.
So I told Penny, I said, Penny, if they put enough money down and have good credit, I can put them in this program. And we don't need appraisal. We need to get a title and we can close. Man. And she said, how fast can we close? So we closed the deal in 3 days.
3 days?
3 business days.
Wow.
That was before the Dodd-Frank bill. Now you cannot close the deal before 7 days. But from Friday to Tuesday, we closed them up.
So they have it in place to where you can't close less than 7 days.
Now, yeah. With the Dodd-Frank bill that happened after 2008, so they have a rule that you can't legally close before 7 days.
So,
now, we can close a loan faster.
Okay.
We actually had a loan that we could have closed in 4 days.
Right.
We had to sit and wait 3 more days. So that still happens, in the mortgage business. When you put a large down payment, then the appraisal waiver, you get a PIW, it's called property inspection waiver, and not needing an appraisal, you don't have to wait a week to get an appraisal.
Right.
And then your loan's already approved. You have somebody with W-2 income, 2 paycheck stubs, and an asset.
That's it.
It's easy. Think about this: if real estate's worth $1, okay, and during a recession is worth 25 cents,
right?
And if you can buy as much real estate as possible for 25 cents, what would happen in 10 years?
It's gonna appreciate,
right? And that money is times 4, right? Oh, but if you borrow the money, right? So if you say we're gonna buy $10 million of real estate,
okay.
Well, if you you need $2 million to borrow 8, right?
Okay.
So if you have $2 million, you borrow 8, buy $10 million in real estate in a recession for 25 cents on a dollar.
Man,
when it comes back to $1, it's worth 40 million.
Oh, you up, man.
So you turn your 2 million into 40 million.
Man.
You pay off the bank minus 8, so you got 32 million. So you just turn 2 million into 32 million. That's why the recession is the best time to make money. If you had another 2008, I don't know if we're going to have another 2008 to that extent, but
I was about to ask
you have to be ready because you can make some money. And I know a lot of people that did that. There's a guy from Lafayette that did phenomenal, buying a bunch of properties in Tampa, and he knocked it out of the park. He did that with $100 million.
Oh, man. So,
that's why I love about real estate. The sky's the limit. And like Sai was talking about it earlier, you find the guys that are aggressive. You find the guys that have a chip on their shoulder.
Absolutely.
That don't take no for an answer.
Oh, yeah, absolutely.
We're not backing down. We're going to make it happen.
We're
going to make it happen.
Absolutely.
I feel like you have that spirit.
Hey, man, I'm trying, bro.
Keep the party going.
If I could get creative with it, I will. I mean, it's hard to say I don't take no for an answer. And if somebody does tell me no, well, show me your friend. Maybe he wants to deal. So that's what I do. If I get a no, I say, well, if you don't want to buy it, show me the person who does want to buy it. Or do you know of anybody else who wants to buy it? So that's why I try to work around it. That's the way I try to work around the no's. But I wanted to ask you, do you think we'll be hitting another recession soon? How you feel about that, man?
I don't know. I think so. But I don't think it's going to be a long one. And I think we're already in it. So by the time we realize that we're in it, it's going to be almost out.
It's going to be almost out.
I think with those high rates and low demand is pretty awkward.
It is, man. It is an awkward market.
I've been doing this for a long time, and usually you have high rates and lower prices. You don't have that. You have high rates and high prices. So it's really hurting the average consumer that, can qualify for a house.
Absolutely.
And at the same time, you have a lot of people with a 2% rate sitting at home being like, hey, I'm not selling.
Oh, yeah. I'm
going to sit pretty here. I'm not selling anything. And I'm going to pay off this loan. That'll be the last loan they pay,
Ooh.
But at the same time that they're paying a 2%, they may be maxed out on their credit cards. They may be, paying 10, 11% on a car note. But they have that 2% on their house.
Yeah.
So, there's some financial education that could happen there with some of those people. But that's probably why there's not a lot of inventory, right?
Right.
So when you have something really good in a good price, it moves really fast, right? And it has a lot of times have multiple offers.
Oh, yeah.
On something below 200,000 that's in good condition, right?
I noticed, as a agent that the houses that were in the 400,000 range to, I would say 600,000, they weren't selling, man. Yeah. It was just sitting. But I noticed the $700,000, $800,000, $900,000 houses moving. I guess when you got big money, man, you don't care about an interest rate, right?
Exactly.
And you know, if the price is lower, well, I mean, it's still enough for you to cover that mortgage. So that $400,000, $500,000 range houses, man, they got hit hard, man.
Yeah,
they got hit hard.
Yeah, because your first time home buyers, I always tell people, buy your first house. Do whatever you have to do to stop paying rent.
Absolutely.
So when you own the house, you're going up on the escalator.
Right.
You're not going up on the stairs anymore. So gotta hop off the stairs and go on the escalator.
Oh, absolutely.
And then you buy another house, the escalator is moving faster.
Yeah.
And then you buy another and move faster, right? So that's how you build wealth, and that's how you create equity. But paying somebody else's mortgage is not a good deal.
No,
and no matter what the interest rate is, right?
Right.
But if you can buy something now at a high rate, and then the rates are gonna come down eventually. The next refi boom is gonna come. I don't know if it's gonna happen next year. The end of this year, some talks. You know, some people are saying it was last year. They're definitely wrong.
I hope it does come, because I think
towards the end of 2024, the rates are gonna be better. In 25, 26, the rates are gonna be back to normal, which people forgot what normal rates are.
Yeah, what is the normal rate?
A normal rate when I got into business, it was 6.75, and then it was 6.25 for a 15-year fix. And then rates stay in the fives, so 5.75 to 5.25.
That's healthy. Yeah.
And that was good. Like when you get a contract, nobody says, I'm not buying this house, the rate's too high. Mm-hmm. But people will do that at 7.5, 8.5.
Oh, yeah.
So normal is that. Now, you know, the T's, 3s, and 2s, you know, it was 5 point something, and then it got to 4 point something. We're like, man, this is really good. And then it got to 3 point something. You know, like, this is phenomenal. I mean, look at the payment. The payment is nothing, you know? Then everybody started buying bigger houses.
Right.
And then it got to the 2s, and it was just like, holy moly. You know, like...
Y'all wasn't expecting
that. It was like free money, you know?
Yeah.
So it doesn't have to go that low, but I'll be happy if we're quoting 4% again.
Oh, man. I wouldn't turn down nothing but my collar, man. You know? I'll take it.
Good stuff.
Yes, sir.
Well, thanks for coming by, man. Good stuff.
Problem,
thanks for sharing everything.
No problem, man. Thank you for having me. Can't wait to do it again.
Let's do it.